Hey YouTube, Louie here. Well, I am feeling very contrarian this morning, and I wonder if you'll come along on this journey with me. Pardon the cold, still getting over. I am really reconsidering my diversification percentages. And when I say diversification, let's just call that for the moment diversification between gold and silver. And I actually diversify in many different ways, but for the purpose of this discussion, this is about gold and silver, and just call it bullion for now, and the gold-silver ratio, and what an appropriate strategy would be given the state of events in the world right now. Now, I'm going to start off by saying, as many of you know, I'm moving. And, when you get up to over 1,000 ounces of silver or more, and you start moving stuff around, you know what? It is really a challenge. And not all of your holdings should be in your home, of course. But, it is really a challenge to move around pounds and pounds and pounds of silver, and not just the silver, but there's a lot of packaging that comes with silver. If you do any collecting at all. So I'm going to lay out a couple of things that are causing me to rethink my diversification strategy. The first is a move and moving into a rental. So that creates some challenges when it comes to, for argument's sake, 1,000 ounces of silver. I've been, watching, just like all of us, with horror, the devastation that's happened in Texas and Florida and possibly other places now too. And, we are all subject to natural disasters, whether they be fires or earthquakes or floods or hurricanes. Okay, so that is my current state of consciousness. And then we have to also acknowledge that gold is easy. It's easy to store, it's easy to hide, it's easy to move, it's easy to sell, it is easy. So now let's move on, and I hope you'll come with me on this analysis as I think through what I want my diversification between gold and silver to be. I do believe in staying diversified. My ratio for the last 3 years has been 75% of the value of my stack in silver and 25% of the value of my stack in gold. It's self-balancing depending on the ratios. It balances itself over time. I just buy more of one or the other depending on how out of whack my value is. A lot of people are talking about diversification these days, but honestly, as I recall, I was probably one of the first people to even mention the word when it comes to stacking about 3 years ago. So I'm glad to see that people are starting to believe more in diversification. The concept of diversification acknowledges that none of us are smart enough to know what is going to happen in silver, gold, platinum, collector coins, pre-33, semi-numismatics, gilded pandas. I mean, the market is huge for all things precious metals. And I have my toe in all those areas because, I'm not smart enough to know what the next leg will bring up or down. Now, there is this thing called the gold-silver ratio. So back to my point, what I have been studying is the common belief that the gold-silver ratio, and here it is over here, the gold-silver ratio, here's a 100-year chart, but let's move over the last few years. The gold-silver ratio moves down. Here it is at 31 in 2011. And it's recently been as high as 80 in March 2016. It currently is $74, and that is simply the price of gold spot divided by the price of silver spot. So I thought that before I bind myself and constrict myself, like so many have done, to the thought of trading the gold silver ratio, I would dig a little deeper. Okay, so that's what this is. And, again, your thoughts are really important here. I know that most of you follow the gold silver ratio, and many of you plan on, trading silver for gold when it gets down to 30, 40, or 50 to 1. And right now you're buying lots of silver, and some of you are buying 100% silver and waiting for that flip opportunity. Okay, great. And I obviously, 75% of my stack is in silver, so I must believe that too, or else I'd be more like 50, 50, 50, or I'd be the opposite way. But what is driving the gold silver ratio? That's what I want to get to here. Rather than a blind belief in what has happened before, what has happened before is math. All right? And figures don't lie, but liars figure and all that. But things are changing, and traditional analyses cannot be trusted. You know why they can't be trusted? Because the US government can't be trusted. And let me take you back in time to tell you exactly why. And okay, guys, I'd like to examine three significant events that have occurred in the last 2 decades that have put pressure on precious metals, and just to see whether or not we think these things can recur, to examine what the impetus might be for a lower gold to silver ratio, and bring us up to the point of readdressing what an appropriate expectation would be for the gold and silver ratio. And so let's go. I'm going to go as fast as I can through these. We had the World Trade Center crash in 2001. In 2001, gold and silver were about $300 for gold and about $4 to $5 for silver. So on September 2001, the gold to silver ratio was in the 60s. Okay, that was the normal, maybe 62 prior to the crash. But the 60s definitely were the normal back then, before we realized our world was changing and terror was a part of it. I do believe that that put constant upward pressure on gold and silver. All right, I don't think this is a coincidence that we start to see the run up in gold and silver around this time. But I believe this is the world we live in today, perhaps even more dangerous. And that is not, aside from really one-off events that could give us an immediate spike in both gold and silver, and they do travel in parallel, if you will see. Just a quick aside, it's interesting that the major spikes in the gold to silver ratio occur when gold and silver disconnect for a very short period of time. Um, for example, you see gold pulling silver up and then silver surpassing it. Well, this is kind of a disequilibrium in the market. So if you're looking for that kind of event, you better be like, a day trader, because it's going to happen and be over before you recognize it. But generally, they travel together. All right. So moving forward, the next thing that happened, which is worth examining, is the real estate crash of 2008 and the subsequent quantitative easing between 2009 and 2011. Okay, I'm going to bring up the Dow just so you can recall. Times were good. In 2007, we had 14,000 on the Dow. We were right before the real estate bubble burst. So in October of 2007, let's take a look at the gold-silver ratio. The market hit its bottom in 2009, just so you know. So in 2007, in the good old days, before we knew how bad things could become, we had an equilibrium around 50. Okay, in 2007, gold was 700, silver was 13 bucks. Okay, equilibrium around 50. Now, what happened in 2008? The stock market and the real estate market started to crash, and crash significantly when markets decline. Often that puts a upward pressure on precious metals, and you have what I call a perfect storm here between 2008 and 2009, 10, and 11, in that markets are crashing, real estate is crashing, and then the government steps in from 2009 to 2011 and begins this thing called quantitative easing, which is them printing bonds and buying their own bonds, excuse me, which is debasing of the monetary supply. So this is where precious metals really gain a big head of steam. We can't trust the real estate market, we can't trust the stock market, and we can't trust the government. Enter Barack Obama as well. And naturally, we see a steep run-up in gold and silver. Now, this spike in silver up to $48 was a speculative nanosecond that nobody sold their silver for $48. I mean, I imagine some really smart people probably sold it around 40. But realistically, we're looking at the apex of the perfect storm being somewhere around 1800, let's see, 17, call it 1700 gold and $40 silver. So let's do that math. 1700 gold divided by $40 silver. 42. Okay, so, this is, and this is right around, this is probably around here somewhere, but really happens really fast. Again, if you're looking to capture anything below 50, you're going to have to really be fast in trading in all those precious metals. And this was the perfect storm. I really don't expect that kind of thing to happen again. However, I would also say that there has been kind of a decoupling of gold and silver. See how it moves in parallel for all this time, and then people speculate, and we get some aberrations, and then we correct from those aberrations. But it seems right around 2013, it seems like the manipulation in the market, in my opinion, has taken hold, and silver is definitely being depressed. And, we have never recovered that gap. All right. If you're betting on that gap to recover for silver to come back into more of a parity with gold, then, we could definitely get back to that 50, that 50 to 1 gold to silver ratio. Let's see. That seems like a reasonable target. But should we wait for that? That's the question. Silver could be manipulated and speculated forever. You have no idea how long they'll be able to do that. And look at all this pressure trying to keep silver below 20. Look how it bangs up against 20 and it gets pushed back down, even though gold is going up, till finally it goes up, to 20, and it busts through only when gold pulls it through, right? There is lots, it seems like that whatever the events that are happening, people, markets, industrial uses want to keep silver below 20. Okay, silver could be below 20 for a long, long time. It does not necessarily have to go back into parity with gold. So, here you've seen the three most important things that have happened in the last 2 decades. You've seen the gold to silver ratio hovering between basically 50 and 75. All right. You've seen silver, it naturally, it caps. There's been a $20 has been a top end cap on silver, 1400 on gold, something like that. What is the future going to bring? And why do I have so much silver? I have a lot of silver. It's really hard to deal with. And the odds that silver is going to go to $100, frankly, is pretty slim. All right. The odds that it's going to go back to 40 or 50, I think that could happen because, things repeat. And there's some natural expectations that there could be another run up that high. But do you think everybody's going to hold on to it when silver gets between $40 and $50? No, they're all going to sell because they sold before. Okay, gold, on the other hand, has had kind of a natural barrier, 1800, 2000. But in any event, I'm thinking less and less about being constrained by the gold to silver ratio and moving my stack to 50-50. and maybe even 75-25. Gold is really amazing, and pre-33 gold is actually a bargain right now. And you can move it around and conceal it and hide it so easily. The real estate crash of 2008 is probably going to recur. That'd be the event that I think will probably happen. And in 2008, we were at 50. Okay, I think 50 is a great target. If you're holding out for a different gold to silver ratio, I think 50 would be the number. I think that's a great number. However, I don't know. We just had silver spike up to 18, which is a nice intermediate high. I mean, when silver was at 15, people were predicting 10, as they always do. And of course, it proved them wrong and went right back up. But I do think we'll have a dip back, and we could get back to 15. It's possible that we are at a high for silver right now. This might be the time to trade out. If silver has gone from 15 to 18 in the last couple of months, okay, that's been a 20% return on your bullion, guys, in the last few months. I'm waiting for some other sell signals before I step back from silver. I do think it'll retrace back to 15 or 14. But now might even be the time, even though it's 75-1 or 73 or 74, and perhaps it'll go to 62. Maybe that's what we should wait for, somewhere in the 60s. But I'm inclined to start moving some of my bullion, silver bullion, into gold. I'm inclined to do it soon. Too much silver. Too much silver. Is there such a thing? Yeah, maybe. I mean, for crying out loud. Okay, if you have 1,000 ounces of silver, you have $20,000, right? You have $20,000. $20,000 won't even buy you a car. $20,000, won't get you a year of college. $20,000 is nothing. Okay, if you want to have a significant investment in silver, you need to be thinking about 1,000 ounces of silver. Okay, what are you going to do with 1,000 ounces of silver? So, I mean, I know we start small and we think big, and every ounce you put away is an ounce for the future. But if you're at 1,000 ounces and on your way to 2,000 or 5,000 or something that might even be significant in your life, 10,000 ounces, what are you going to do with it? How are you going to move it around? How are you going to store it? You know how easy it would be to have $100,000 worth of gold? You could have it in a shoebox. So, I don't know. This is all causing me to rethink. I would love this ratio to be closer to 60-1. If we get back to $14 silver, let's just say we have $1,200 gold, and we get back to $14 silver, which I think we probably will, that's 85. Did I already do this? I apologize if I'm repeating myself. But, 65 to 75, this could be the time to jump out. Look at this chart. Top, top, top. What happens when a stock keeps bouncing against its top several times? It's getting energy to break through. So we could easily see this ratio going to 100-1 in the future rather than 75. Looks like the gold-silver ratio is really trying to push through the 75, not retrace back to 50. Right? Right? Is that going to happen? Okay, well, I'm all over the map here, and obviously I'm developing a bias for gold, which I haven't had previously. But go ahead, please post your thoughts. I'd love to hear what you think. I'm sorry I've rambled so long, but I could not easily bring this to a head without exploring all these different facets. All right, guys, thanks so much. Louis signing out.